Welcome back to our channel, tech enthusiasts and market mavens. Today, we're diving into the exciting world of Dell Technologies Inc. and breaking down some eye-popping metrics that will give you the full picture of this tech giant. So grab your popcorn, hit that like button, and let's get started. Let's talk PR, folks. Dell's price-to-earnings ratio for the trailing 12 months is sitting at a hefty 23.90. That's quite a leap from its 5-year average of 8.35. What does this mean? Well, it suggests Dell is currently valued much higher compared to its earnings than it has been on average over the past 5 years. Looking forward, the price-to-earnings ratio is estimated to be 18.65. So, while it's still higher than the historical average, analysts expect a bit of a pullback from the current lofty heights. Now, check this out. Dell's PG ratio is a staggering 29.50. The PG ratio helps us understand the relationship between the stock price, earnings growth, and valuation. A high PG ratio might suggest the stock is overvalued relative to its growth potential. Here's something juicy. Insiders own a whopping 62.48% of Dell. This high level of insider ownership often signals strong confidence in the company's future. Return on equity data isn't available due to negative equity, which can raise some eyebrows. It's a red flag for some investors, indicating the company has more liabilities than assets. But wait, Dell's return on assets stands at a modest 3.75%. This means Dell is making a modest profit on its assets. Now, here's a sweet spot. Dell's return on invested capital is an impressive 23.42%. This shows how effectively Dell is using its capital to generate profits. Dell's EPS or earning per share is 7.11. But looking ahead, EPS growth for the next 5 years is expected to be just 0.81% per year. Over the past decade, Dell's EPS has shown positive growth with a huge spike in 2019, then flattening out. The compound annual growth rate since 2019 is 1.77%. The free cash flow per share has been a bit inconsistent over the last decade, but it still boasts a CAGR of 5.38%. Dividend lovers, rejoice! Dell's dividend yield is 1.25% with a fantastic dividend growth rate of 16.77% since it started paying dividends in 2022. Dell's operating margin is 6.75% and profit margin is 3.63%. These metrics give us insight into how much profit Dell keeps after covering its operating expenses. Dell has shown a positive evolution in both revenue and earnings over the last 8 years, outpacing the total returns of VO in the last 5 years. Here's a biggie. Dell's debt-to-EBITDA ratio is 4.82 and debt-to-free cash flow ratio is 4.39. High debt levels can be concerning, so keep an eye on these numbers. Hold on to your hats. Dell's average price return over the last 52 weeks is a jaw-dropping 259.09%. Talk about a stock on fire. Dell's market cap is a massive $127.32 billion. That's the value of all its shares combined. Finally, analysts predict that in the next 12 months, Dell's price will drop to $151.06 from the current $169.92, representing a downside of 11.1%. However, based on my analysis, the fair value is even lower at $117.90, suggesting a potential overvaluation. And that's a wrap, folks. Dell Technologies is a mixed bag of impressive returns, high valuations, and some debt concerns. Whether you see it as a diamond in the rough or a risky bet is up to you. If you found this breakdown helpful, smash that like button, share with your friends, and subscribe for more deep dives into the stock market. Until next time, happy investing!